All right, let's talk about Ford, which predicts it's going to lose $3 billion on electric vehicles this year, a painful part of the company's transition to EVs. But,
well, look, Phil, as you said, if this persists, this tariff persisted with Mexico and Canada, it would mean billions of losses for the domestic car industry, huge impact for jobs in the U.S.
Ford just made an announcement so catastrophic that their stock crashed 18% in a single day, wiped out $9 billion in market value, and sent shockwaves through the entire automotive industry. CEO Jim Farley didn't just admit that Ford's EV strategy failed. He revealed that the company is hemorrhaging $4.5 billion annually on electric vehicles, while Chinese competitors are preparing to flood America with trucks that cost half as much. But that's not the insane part. The insane part is what Ford announced they're doing about it, cutting 25,000 jobs, closing 6 factories, and essentially admitting that America's second-largest automaker can't compete in the future of transportation. This isn't just a corporate restructuring. This is Ford's admission that they're fighting a war they've already lost. July 24th, 2025 will go down as the day Ford Motor Company committed corporate suicide on live television. At 4:30 p.m. Eastern, CEO Jim Farley stepped up to the podium for what was supposed to be a routine quarterly earnings call, and instead delivered the most devastating corporate confession in automotive history. The numbers were catastrophic from the opening statement. Ford reported a $1.1 billion quarterly loss, but that wasn't the shocking part. The shocking part was Farley's admission that Ford's electric vehicle division, Ford Model E, is losing $4.5 billion annually with no path to profitability in sight. Our EV operations are unsustainable, Farley told stunned analysts. We're losing approximately $40,000 on every F-150 Lightning we sell, and demand has collapsed to levels that make continued production economically impossible. The market's reaction was swift and brutal. Ford stock, which closed at $12.47 the previous day, opened at $10.23 the following morning, an 18% overnight collapse that wiped out $9 billion in market value. But the selling didn't stop there. By market close, Ford had lost $11.2 billion in market capitalization, making it one of the worst single-day losses in automotive history. The analyst panic was immediate and unprecedented. Morgan Stanley downgraded Ford from hold to sell within hours of the announcement. Goldman Sachs issued a research note titled Ford, the End of an Era, that recommended investors exit all positions immediately. JP Morgan's automotive analyst called Ford's situation an existential crisis with no viable solutions. We've never seen a major automaker admit complete strategic failure this publicly, explained Wall Street analyst Sarah Chen. Farley didn't just report bad numbers. He essentially told investors that Ford's entire future strategy was wrong and they have no idea how to fix it. The competitor celebration was equally telling. General Motors stock surged 7% on Ford's misery, with CEO Mary Barra issuing a statement about GM's disciplined approach to electrification. Tesla shares jumped 12% as investors realized Ford's collapse eliminated their most credible American competitor. Even Stellantis, struggling with their own problems, gained 4% as Ford's disaster made everyone else look competent. The institutional investor exodus began immediately. Vanguard, BlackRock, and State Street, Ford's 3 largest shareholders, all reduced their positions within 48 hours of the announcement. Pension funds that had held Ford stock for decades started dumping shares, recognizing that the company's dividend was unsustainable given the massive losses. But the most damaging part of Farley's announcement wasn't the financial numbers. It was his admission that Ford had no plan to compete with Chinese automakers who were preparing to flood the American market with electric trucks that cost half as much as Ford's offerings. We're facing competition that we simply cannot match on price, technology, or manufacturing efficiency, Farley confessed. The Chinese are building better electric trucks for $30,000, while we lose money selling inferior products for $70,000. That admission didn't just destroy Ford's stock price. It destroyed the entire premise that American automakers could compete in the electric vehicle future. Ford's electric vehicle catastrophe represents the most expensive strategic failure in automotive history with losses so massive they threaten the company's survival. The $4.5 billion annual hemorrhage isn't just bad accounting, it's the mathematical proof that Ford's entire EV strategy was built on delusions rather than business reality. The Lightning catastrophe is the centerpiece of Ford's EV disaster. Internal Ford documents, leaked to Automotive News, reveal that Ford loses approximately $40,000 on every F-150 Lightning sold. With production costs of $110,000 per vehicle and average selling prices of $70,000, Ford is essentially paying customers $40,000 to drive their trucks. The Lightning economics are insane, explained former Ford executive David Park. We're selling $110,000 trucks for $70,000 and calling it market penetration. That's not a business strategy. That's corporate suicide with extra steps. The Mustang Mach-E mistake compounds Ford's EV losses with a vehicle that nobody wants at any price. Despite massive marketing spending and dealer incentives, Mach-E sales dropped 47% in 2024. Ford is offering $12,000 cash back, 0% financing, and free charging credits. But customers are still choosing Tesla Model Y vehicles that cost more and offer less. The battery plant boondoggle represents Ford's most expensive single mistake. The company invested $7 billion in battery manufacturing facilities across Kentucky and Tennessee, expecting to produce batteries for 600,000 vehicles annually. Current production supports fewer than 150,000 vehicles, meaning Ford built 4 times more capacity than they can use. The range reality has destroyed customer confidence in Ford's EV technology. The F-150 Lightning was marketed with 300-plus miles of range, but real-world testing shows most customers achieve 180 to 220 miles under normal conditions. Worse, the range degrades rapidly. Consumer Reports documented 25% battery capacity loss within 18 months of ownership. Ford promised me 300 miles of range and delivered 190 miles on a good day, explained Lightning owner Mark Rodriguez from Arizona. After 14 months, I'm getting maybe 140 miles per charge. I bought a truck that can't do truck things because it can't go truck distances. The charging infrastructure collapse has made Ford EVs practically unusable for many customers. Ford's partnership with Electrify America was supposed to provide nationwide fast charging, but 34% of charging stations are non-functional at any given time. Customers report waiting hours for working chargers or driving hundreds of miles to find functional charging infrastructure. The quality control crisis has destroyed what little credibility Ford's EVs had remaining. The Lightning has been recalled 12 times in 18 months for issues ranging from battery fires to complete electrical system failures. The Mach-E has experienced 8 recalls, including one that disabled the vehicle's ability to start. Every Ford EV recall is an admission that we released unfinished products to meet arbitrary deadlines, admitted a Ford quality engineer who requested anonymity. We knew these vehicles had problems, but management pushed them to market anyway. The most damaging evidence comes from Ford's own warranty data. EV warranty claims average $4,800 per vehicle in the first year, nearly 4 times the industry average and higher than the profit margin on most Ford vehicles. Ford is literally paying more to fix their EVs than they make selling them. Ford's dealer network is in open revolt against the company's EV strategy, with franchise owners refusing to invest in electric vehicle infrastructure and some abandoning Ford entirely. The $1.2 million ultimatum that Ford issued to dealers has backfired spectacularly, creating the largest franchise rebellion in automotive history. The certification chaos began when Ford demanded that dealers invest $1.2 million in EV-specific equipment, training, and facility upgrades to sell electric vehicles. This wasn't a suggestion, it was a requirement. Dealers who refused would lose access to Ford's EV inventory entirely. The result? 40% of Ford dealers said no, choosing to forfeit EV sales rather than make investments they couldn't justify. Ford wanted me to spend $1.2 million to sell cars that lose money and sit on my lot for 200-plus days, explained Ford dealer Mike Thompson from Tennessee. I did the math. Even if I sold every EV Ford allocated to me, I'd never recover that investment. It's financial suicide disguised as a business opportunity. The service nightmare has made EV certification even less attractive for dealers. Ford's electric vehicles require specialized diagnostic equipment, high voltage training for technicians, and parts inventory that costs 3 times more than traditional components. Dealers report that EV service takes 40% longer than comparable gas vehicle repairs, while generating lower profit margins. The inventory crisis is destroying dealer profitability across Ford's network. EVs are sitting on dealer lots for an average of 267 days before selling, compared to 45 days for gas-powered F-150s. During that time, dealers pay floor plan interest, insurance, and carrying costs that eliminate any potential profit from eventual sales. I have 23 Lightnings on my lot right now, and some have been there since October 2024, explained Ford dealer Jennifer Walsh from Ohio. I'm paying $200 per day per truck in carrying costs. That's $4,600 daily, just on Lightning inventory that won't sell. It's bleeding me dry. The profit margin collapse has made Ford EVs economically unviable for dealers. While gas-powered F-150s generate $4,000 to $6,000 in gross profit, dealers report losing money on every EV sale after accounting for incentives, carrying costs, and preparation expenses. The franchise abandonment represents the ultimate dealer rebellion. 73 Ford dealers have terminated their franchises entirely since the EV ultimatum, choosing to close rather than comply with Ford's requirements. Others are converting to used car operations or switching to different manufacturers. I've been a Ford dealer for 31 years, but I can't afford to be one anymore, explained former dealer Carlos Rodriguez from Texas. Ford's EV strategy is destroying profitable dealers to chase a market that doesn't exist. I switched to Toyota and tripled my profit in 6 months. The most damaging aspect of the dealer revolt is its impact on Ford's market coverage, with 40% of dealers refusing EV certification and others abandoning the franchise entirely. Ford has created massive gaps in their sales and service network. Customers in rural areas may live hundreds of miles from the nearest Ford EV dealer. Ford's dealer network built the company's success over 120 years. Now that same network is rejecting Ford's future, creating an existential crisis that threatens the company's ability to sell vehicles at all. The F-150 Lightning represents Ford's most catastrophic product failure, a vehicle so fundamentally flawed that it's destroying the reputation of America's best-selling truck while losing $40,000 on every sale. What was supposed to be Ford's electric vehicle flagship has become a $7 billion disaster that's accelerating the company's collapse. The $40,000 loss per vehicle isn't an accounting error. It's the mathematical reality of Ford's Lightning economics. With production costs exceeding $110,000 and average selling prices of $70,000, Ford is essentially paying customers to drive their trucks. This isn't sustainable pricing strategy. It's corporate financial suicide, disguised as market penetration. The Lightning loses more money per vehicle than most cars cost to build, explained automotive analyst Dr. Sarah Chen. Ford is hemorrhaging cash on every sale while pretending it's a viable business model. You can't lose $40,000 per unit and call it success. The production halt has turned Ford's Dearborn facility into an expensive monument to strategic failure. The Rouge Electric Vehicle Center, which cost $700 million to build, is operating at 23% capacity due to collapsed demand. Ford has laid off 1,400 Lightning workers and suspended weekend shifts indefinitely. The recall cascade has destroyed whatever credibility the Lightning had remaining. 12 separate safety recalls in 18 months have covered everything from battery fires to complete electrical system failures. The most damaging recall involved 47,000 Lightnings that could lose power while driving, leaving customers stranded on highways. My Lightning died on a 75 during rush hour traffic, explained customer Mark Rodriguez from Michigan. Complete electrical failure, no warning, no power steering, no brakes. Ford's response was, "Bring it to the dealer. I had to have it towed 40 miles because the nearest Ford EV service center was booked for 3 weeks." The customer abandonment is unprecedented for a Ford product. Consumer satisfaction surveys show that 67% of Lightning owners will not buy another Ford vehicle, citing reliability problems, range anxiety, and poor service experiences. This represents the highest customer defection rate for any Ford product in company history. The resale collapse has made Lightning ownership financially devastating. Vehicles that sold for $70,000 new are worth $38,000 after 1 year, a 45% depreciation rate that destroys customer equity and makes leasing economically impossible. Used car dealers report that Lightning trade-ins sit for months without buyers. The commercial rejection has eliminated Ford's most important Lightning market. Fleet buyers who were supposed to drive Lightning sales are choosing competitors after experiencing the vehicle's limitations. UPS, FedEx, and Amazon have all canceled Lightning orders, citing range, reliability, and service concerns. "We tested 50 Lightnings for our delivery fleet," explained a logistics executive who requested anonymity. Range degradation, charging problems, and constant recalls made them unusable for commercial operations. "We switched to Rivian and haven't looked back." The most damaging evidence comes from Ford's own internal data. Lightning warranty claims average $6,200 per vehicle in the first year, the highest of any Ford product and more than the company's profit margin on most vehicles. Ford is paying more to fix Lightnings than they make selling them. The Lightning death spiral isn't just about one failed product. It's about Ford's inability to build competitive electric vehicles that customers want to buy and can afford to own. Ford's announcement revealed the terrifying truth that American executives have been hiding from investors. Chinese automakers aren't just competing with Ford, they're about to obliterate them with superior technology at half the price. The BYD invasion represents an existential threat that Ford admits they cannot counter. The BYD invasion timeline is accelerating faster than Ford can respond. BYD's electric pickup truck, launching in Mexico in early 2026, will offer 280 miles of range, advanced AI features, and a $28,000 price tag. That's $42,000 less than Ford's Lightning for comparable capability, creating a competitive gap that Ford cannot bridge. BYD isn't just building cheaper trucks. They're building better trucks for less money, explained automotive analyst Dr. Robert Chen. When Chinese manufacturers can offer superior technology at 40% of Ford's price, American automakers face extinction, not competition. The technology gap extends far beyond pricing to fundamental capabilities that Ford cannot match. BYD trucks feature 3-minute battery swapping, 500 kilowatt dual port charging, and AI assistants that actually understand human conversation. Ford's Lightning offers none of these features at any price, making it obsolete before Chinese trucks even arrive. The manufacturing advantage reveals why Chinese competition is unstoppable. BYD controls 75% of their supply chain, from lithium mining to finished vehicles, while Ford depends on hundreds of suppliers for critical components. This vertical integration allows BYD to control costs, quality, and innovation in ways that Ford's supplier-dependent model cannot match. Ford builds trucks by assembling parts from other companies, explained former Ford executive David Park. BYD builds trucks by controlling every component from raw materials to software. When your competitor controls their entire supply chain and you control none of yours, you've already lost. The tariff failure has exposed the weakness of American protectionist policies. Despite 100% tariffs on Chinese vehicles, BYD is building manufacturing facilities in Mexico, just 90 minutes from the Texas border. These plants will produce Mexican trucks that avoid tariffs while maintaining Chinese cost advantages. The Mexico strategy represents Chinese manufacturers' masterstroke against American trade policy. BYD's Tijuana facility will produce 200,000 vehicles annually, starting in 2026, with additional plants planned in Monterrey and Guadalajara. These aren't assembly operations. They're full manufacturing facilities that will flood North America with affordable electric vehicles. The timeline is Ford's nightmare scenario. Chinese trucks will be available to American consumers within 18 months, while Ford's next-generation Lightning won't arrive until 2028. By the time Ford responds to Chinese competition, BYD will have established dealer networks, service infrastructure, and customer loyalty that will be impossible to overcome. Internal Ford documents, leaked to industry publication Automotive News, reveal the company's assessment of Chinese competition. BYD and other Chinese manufacturers represent an existential threat to Ford's North American operations. We cannot compete on price, technology, or manufacturing efficiency. Market share loss will be catastrophic and irreversible. The most damaging admission came from CEO Jim Farley himself. We're facing competitors who can build better products for half our costs. This isn't a temporary disadvantage. It's a permanent structural problem that threatens Ford's survival. Ford's Chinese competition reality check isn't about future challenges. It's about present threats that are already destroying the company's viability. Ford's announcement of 25,000 job cuts has triggered the largest labor crisis in the company's modern history, with the United Auto Workers Union declaring war against management and threatening to shut down Ford's remaining profitable operations. This isn't just a labor dispute. It's an existential battle that could destroy what's left of Ford's manufacturing capacity. The 25,000 job cuts represent the largest workforce reduction in Ford's history since the 2008 financial crisis. But unlike previous layoffs that targeted specific plants or programs, these cuts span every division and geographic region. Ford is eliminating entire departments, closing research facilities, and abandoning product development programs that employed thousands of engineers and technicians. Ford is essentially admitting they don't need 25,000 employees because they don't have 25,000 employees worth of work, explained labor analyst Dr. Amanda Foster. When a company cuts 15% of its workforce simultaneously, that's not optimization, that's managed decline. The UAW response has been swift and militant. Union President Shawn Fain called Ford's announcement a declaration of war against American workers and threatened immediate strike action at Ford's most profitable facilities. The union is demanding that Ford reverse the layoffs, maintain pension obligations, and guarantee job security for remaining workers. The factory closures compound the job cuts with permanent facility shutdowns that will eliminate entire communities' economic foundations. Ford announced the closure of 6 manufacturing facilities, including the Chicago assembly plant, the Ohio assembly plant, and 2 engine manufacturing facilities in Michigan. These aren't temporary shutdowns. These are permanent closures that will destroy communities that have depended on Ford for generations, explained Fain during a press conference. Ford is abandoning American workers to chase profits in Mexico and China. The pension crisis represents Ford's most expensive long-term liability. The company faces $8 billion in unfunded pension obligations to current and former employees. But the job cuts and plant closures reduce Ford's ability to fund these commitments. Union officials warn that Ford may declare bankruptcy to escape pension responsibilities. The automation acceleration has become Ford's strategy for eliminating union workers permanently. The company is investing $2.3 billion in robotic manufacturing systems, designed to replace human workers in assembly, welding, and quality control operations. These investments will eliminate thousands of additional jobs over the next 5 years. Ford is using the EV transition as an excuse to replace union workers with robots, explained UAW Local 600 President Bernie Rickey. They're not just cutting jobs, they're eliminating the possibility of future jobs for American workers. The political pressure is mounting as Ford's crisis becomes a national issue. Congressional Democrats are demanding investigations into Ford's use of taxpayer subsidies while cutting American jobs. Republican lawmakers are criticizing Ford's dependence on Chinese suppliers while abandoning American manufacturing. The strike threat looms over Ford's remaining operations. The UAW has authorized strikes at Ford's Kentucky truck plant, Dearborn truck plant, and Kansas City assembly plant, facilities that generate most of Ford's remaining profits. A coordinated strike at these facilities could force Ford into bankruptcy within weeks. Ford's union war isn't just about labor relations. It's about whether American manufacturing can survive the transition to electric vehicles without destroying the workers who built the industry. The ICE retreat abandons Ford's electric vehicle ambitions in favor of focusing on internal combustion engines and hybrids. This strategy ignores the reality that global automotive markets are mandating electric vehicle transitions through regulations that will eliminate gas-powered vehicles within a decade. Ford is choosing to excel in a technology that's being banned worldwide, explained automotive strategist Dr. Sarah Chen. Retreating to internal combustion engines in 2025 is like investing in typewriters during the computer revolution. The cost-cutting that Ford calls efficiency improvements actually destroys the company's ability to innovate and compete. Research and development spending has been slashed 34%, new product development timelines have been extended by 18 months, and Ford has eliminated entire engineering departments responsible for future technologies.